I would argue that the supercharger network is Tesla's card in the hole, or perhaps its ace in the PowerPoint. Elon made a really wise investment there. All the other corner companies are now switching to the plug type that he has in that network of superchargers. Additionally, he is beginning to let other businesses and automobiles use it. If he gains dominance in the infrastructure and power supply sector, he might wind up with a quite interesting subscription model. It's still the second or third inning of the story being told, back against the wall. We've seen this before, so I'm not claiming it will be rose champagne. After they're through with it, you're going to be talking about arriving to that stage where 34 million automobiles are done annually. And Kathy is probably right. Renowned analyst Dan Ives has boldly declared what he believes will be Tesla's future valuation. Come along as we dissect his audacious prediction and investigate the elements that could propel Tesla's possible meteoric ascent in the upcoming years. Tesla's stock has considerable influence over specific market segments, but is the current decline warranted? Are there going to be more drops? Analysts continue to suggest the stock with equal weight in spite of the risk. Keep checking back to find out more about the potential implications for investors and the state of the electric vehicle market overall. Please first like this video and subscribe to Tesla Stock News in order to help us support our channel. Thank you for visiting Tesla Stock News. Now, let's get going. Is Tesla still the best electric car maker now, especially in light of the general downturn in the industry? Although analysts acknowledge Tesla's current supremacy, they also point out ongoing issues that affect the EV environment as a whole, such as slowed deliveries and regulatory obstacles. Though there are worries, there remains hope for Tesla's future. Dan and other analysts predict that there will be more growth and that the company may eventually generate millions of cars a year. But issues like range anxiety and EV charging infrastructure still exist, which affects how quickly consumers adopt new products. It's interesting to note that Tesla's success isn't exclusively a result of pricing lower than rivals. They've been successful in drawing clients away from more established automakers, so unexpectedly growing the market. This implies that while pricing is important, product availability and brand appeal are equally important factors that influence the adoption of EVs. Let's change our focus and discuss the larger EV market. Due to a slower than expected start and updated automaker plans, analysts have reduced their sales projections. Notwithstanding these obstacles, it is anticipated that EV sales will increase gradually over the next few years due to the introduction of new products. With an anticipated 50% market share this year, Tesla is still the dominating player in this industry. However, rivals like General Motors are advancing with breakthroughs like the ULM platform that position them to take a double-digit market share. But what's impeding the broader adoption of EVs? Price is undoubtedly a factor, but it's not the only one. It's also necessary to address consumer behavior and infrastructure. But with more advancements in technology and market growth, electric car prospects appear bright. An additional investor stated that they had made some changes to our estimates. Yes, we still make up a small portion of the market overall, but this year we believe it to be close to 10%. Naturally, we think Tesla will continue to dominate the market. We expect to have little less than 50% of the market this year. We believe that a new offering this year, such as the updated Model 3, will be crucial for them. Naturally, Cybertruck is ramping up too. Among the many truly amazing things that Tesla has accomplished in the last few years is that, contrary to what I believe most people believe, a fair amount more of the conquest comes from mass-market brands when you look at some of the third-party data about conquest and who they are actually taking share from. And that's what makes EVs appealing, isn't it? Effective electric vehicles, EVs, have achieved remarkable feats in terms of market penetration and acquisition of lower-priced niches. However, in general, to our point, price reductions over time are necessary to boost adoption. We believe that 9.5% this year can still be achieved with a slight price premium above the market as a whole. EV sales are expected to develop steadily this year despite obstacles, with penetration expected to reach roughly 9.5% and rise to 15% by 2025. However, we had to modestly reduce our numbers due to delayed beginnings and updated plans from automakers. Furthermore, who do you think will dominate the EV market this year? According to Dan, Tesla is still the leader and is predicted to hold onto almost half of the market. With its ULM platform, General Motors is likewise making great progress and is well positioned to take a sizable portion of the market. However, the market needs better infrastructure and a wider range of product offerings to further accelerate adoption. So, what do you think is the largest obstacle to the adoption of EVs? While price is a consideration, there are other difficulties as well. It's also necessary to address consumer behavior and infrastructure. Nonetheless, the future of electric vehicles is bright given current improvements in the industry and technological advancements. As Dan Ives noted, investors are still interested in Tesla, even though it faces more competition. You know who else is as optimistic about Tesla as you are? Our pals from Seeking Alpha. It's not enough to merely watch Tesla's phenomenal rise from the sidelines. Seeking Alpha is your one-stop shop for the most recent information on Tesla, Tesla stock price targets, Tesla innovation, and everything Elon Musk related for fans of the company and those who have an eye for finding the next big stock market find. The internet's top pro-Tesla news outlet is Seeking Alpha. Get to the facts without listening to the lamestream media's anti-Tesla propaganda. To take advantage of a special discount, click the link in the description. There is no denying Tesla's influence on the energy and automobile sectors. In this video, we'll examine how Tesla is improving its revenue game and how you, as a Tesla investor, may profit from its vision and cutting-edge products. Additionally, Ford EV customers now have access to the Tesla supercharger network with the use of an adapter, which is excellent news. When Elon Musk and Jim Farley announced their partnership on Twitter Spaces a year ago, people were shocked. The result of that collaboration is already seen as Ford EV users may now make use of Tesla's network of superchargers. With this carefully designed adapter from Tesla, Ford EVs can be connected to Tesla chargers with ease, making the charging process easier. Ford has a competitive advantage as the first carmaker to use the Tesla charging network thanks to this partnership. This is a benefit that will surely appeal to customers who want dependable charging infrastructure but aren't ready to buy a Tesla. Tesla's well-established infrastructure guarantees a consistent charging experience for all vehicles, allaying worries about charging times. Tesla is still the industry leader in electric vehicle sales thanks to its well-known brand. A sizable percentage of Tesla's sales come from word-of-mouth recommendations, which emphasizes the company's devoted following and community-focused philosophy. A major change in the business is indicated by Tesla's recent decision to let non-Tesla automakers to use its supercharger network. In addition to helping other manufacturers, this action presents a problem for charging businesses who only use proprietary standards. An important turning point in the development of EV charging is the incorporation of Tesla's North American charging standard into charging devices. With Tesla's charging connector, the North American charging standard is the industry standard in North America, gaining popularity and becoming the most reliable, with over 20 billion EV charging miles. In terms of size and power, Tesla's connector surpasses rivals such as the tsla connector, providing both AC and up to 1 megawatt DC charging in a stylish, small design. What distinguishes Tesla from other manufacturers is its early recognition of problems and prompt resolution of them. Tesla made an investment to create a vast supercharging network after realizing the possible obstacle presented by insufficient charging infrastructure. This network has been essential in reducing range anxiety and encouraging the use of EVs. When one looks at Tesla's performance in the market, one can see that it is in a prominent position. Of the 12 Tesla models available in the US, 7 are eligible for tax credits since they satisfy IRS sourcing requirements. This emphasizes how dominant Tesla is in the US market, where most EV sales satisfy tax credit requirements. Beyond Tesla, General Motors is a strong competitor that supports its electric vehicle, EV, activities with strategic alliances and localized supply chains. Nonetheless, Tesla has a competitive advantage thanks to its established alliances and wealth of battery production knowledge. In response to worries over EV demand, it is evident that the dynamics of the industry have changed. In the past, when demand spiked, supply became constrained and prices skyrocketed. However, subsequent modifications have brought prices down to more reasonable levels. However, this has lowered the value of EVs when they are sold, making it more difficult to calculate the entire cost of ownership. EV adoption has advanced significantly in China and Europe, but the US market has its own set of difficulties, especially given consumer preferences that are shifting towards larger cars. From the Model S to the Model Y, Tesla's wide range of products demonstrates the company's dedication to both performance and innovation. Within 10 years, industry analysts predict that Tesla's efforts to expand its network of charging stations to other automakers may bring in up to $5 billion in income annually. Jonathan McNeil, a former executive at Tesla, compared this development to an AWS moment for the company, emphasizing how an expensive burden was turned into a lucrative endeavor. Industry analysts like Dan Ives are also optimistic about the future, especially with relation to the electric vehicle (EV) business. Tesla hopes to gain a lot as a major participant in the electric car industry with a substantial market share. Tesla is moving closer to complete autonomy and has the ability to completely transform transportation thanks to a large fleet of electric cars that are gathering useful data and high demand for its products. But there are obstacles ahead, especially in the supply chain. Senator Joe Manchin's opposition to tax credits for electric vehicles highlights how complicated the situation is. Given China's dominance in this market, the IRS requirements for battery component assembly and raw material procurement in North America provide substantial obstacles. The instability of raw material prices, particularly those of lithium, adds another layer of complexity and may jeopardize the profitability of supply chain initiatives in North America. It takes more than just flicking a switch to increase Tesla's manufacturing capacity. It's a procedure that takes resources and time. Although there is a growing market for Tesla's battery goods among both internal and external consumers, increasing production capacity requires careful planning and implementation. Tesla's patented battery packs continue to power its electric cars, despite these obstacles, offering better efficiency and performance. Furthermore, Tesla offers a range of battery products to suit different types of customers, such as Powerwall, Powerpack, and Megapack. Strategic advantages in the future include Tesla's supercharger network and the upcoming Cybertruck. Although the market impact of the Cybertruck is still unknown, Tesla is positioned as a major player in EV infrastructure thanks to its investment in its network of superchargers. As other automakers use Tesla's network and plug type, Tesla may be able to develop a profitable subscription business that would increase its sources of income. Tesla's competitive endurance is highlighted by its price strategy, which aims to preserve profitability while acquiring market share. Tesla continues to be flexible in its response to market conditions, even in the face of margin pressure from lower average selling prices. Tesla's ability to maintain innovation and overcome market obstacles will be crucial in evaluating its future prospects. Tesla's future in the changing electric vehicle market will be determined by its entry into new markets, ongoing technological developments, and emphasis on battery economy and autonomous driving. There are several chances and challenges for Tesla as it enters the electric vehicle industry. Tesla keeps reshaping the transportation industry with its growing production capabilities, pricing methods, and infrastructure investments.